Everybody, welcome back to another episode of VCTV. I'm your host, Kyle Ellicott, and we are here to talk about our favorite subject of VCTV, fintech and blockchain. We know how important these areas are, not just to this year here in 2020, but looking ahead at our future lives and also the next decade ahead of us, and how these two industries and technologies will be impactful to everything we know and we do. It is something we continually talk about here on all of our episodes of VCTV, as other technologies are starting to converge with these areas as well, creating new products, new services, and new business opportunities for each and every one of us, both on the investing side and on the founder side as well. Just a few headlines for you as I like to read off in this episode in particular. We've got NFTs everywhere. NFTs seem to be the new DeFi. We'll talk a little bit more about that today, but Genies, 3D avatar company, has just put out a partnership with Dapper Labs to create customizable 3D avatars for us each to live our digital lives more excitingly and more avatar-like than we have today. And currently, New York's Albany International Airport has recently collaborated with General Electric, GE, to digitize the airport's operations to track COVID cleaning processes and making the air travel experience in the airport a little safer on their behalf. The airport has implemented GE's Aviation's blockchain-powered wellness tracking application to make this happen. There's a few more announcements we'll make throughout the rest of the show, but there's just a few headlines for you in today's episode. With that, a big thank you for you, our audience, for tuning in. If you like what you hear, make sure you click that big red subscribe button down there to tune into all episodes of VCTV all day, every day, on so many different subjects, topics, industries, regions around the world, with great investors joining every single day. Also, if you'd like to be on a show like today, do reach out, and we'd love to find the right set of investors and also topics for you to speak about. Entrepreneurs, last but not least. There are less than 45 days in the year, but more importantly, there's a new year ahead of us. This is the perfect time to be out there pitching, building relationships, and getting exposure for your company, product, or service. We have a virtual stage here at VCTV for you to do just that. Reach out to the team and or myself, and we'd love to find the right stage for you. Last but not least, a big thank you to the LA Token team and to Maria for making VCTV possible every single day and bringing us all together in this wonderful, exciting Zoom room to be able to have these great discussions and to share with you. At any times, if you have any questions, comments, concerns, drop them in the box. We'll do our best to ask them in real time. If not, we're all available 24/7, 365 online. With that, I'm your host, Kyle Ellicott. Let's get into it. Arena, welcome back to the show. It's a pleasure. Crypto Superwoman is here, ladies and gentlemen. A little intro, a little background for everybody.
Thank you so much for having me. Please excuse if you hear any little bit of a construction noise. I am at our ranch preparing for everything for ARA, and we're opening gates today. My name is Irina Litchfield. Many know me as a crypto superwoman. I am founder of Blockchain Cubed. Blockchain Cubed is a blockchain integration company. We do everything from community integration to technical architecture design. Financial technology is something that's been driving me for over 15 years, since I basically started running a business one way or the other. And I'm also president of Lumeria, and Lumeria is where capital meets innovation. And we're here to really democratize opportunities and investments. And tomorrow we are launching our kind of a first pitch competition, and we'll be selecting, by the end of the weekend, we'll be selecting hopefully 2 companies that will be sponsored for ABE listing global. So very exciting. And I'll tell you more, and I'll tell you more why it makes difference, not just for small market cap companies with which our target was, but a couple weeks ago things changed here for retail investors as well. So, but I'll mention that later. Thank you.
Awesome. Thank you, Irina. Welcome back. Daniel, it's a pleasure. A little intro, a little background for everybody who may not know you.
Yeah, so I'm Daniel Leon. I'm the co-founder of Celsius Network, or as we know today is after the rebranding Celsius. We, we put a big mission in front of our eyes, and that is to bring economic freedom and to put economic freedom in the hands of the people through this mobile app that we developed. We started this company, Alex Mashinsky, myself, and our CTO, Nick Goldstein, at the beginning of 2018. I believe we were one of those last ICOs that kind of, that made it and escaped the storm that followed. And ever since, we wrote this white paper that was the basis of this ICO. We started building and making things and breaking things, and developed an app that the last 18 months since we launched it in June of 18, we brought close to 225,000 customers. We're managing $2.6 billion in assets. Just the last year, we went from 600 million to 2.6 billion. It's growing like crazy with very little marketing, which is, when you see the growth coming from this amazing community, and I think there's a powerful story that we should all talk about, and that is the place of community in building these organizations, right? I mean, this is not like, let's buy ads on Facebook. It's not working anyway. We can't. So the only way to make it is to put the community at the center, and we're doing it by giving 80% of our revenues back to the community. We offer people worldwide 2 services: the ability to earn interest on their crypto deposits, which they huddle with us. We pay 6-7% on various crypto assets, between 11 to 15% on various stable coins. We paid to date close to $100 million worth of value of interest back to our users. The last, close to 18 months, almost 2 years. We're growing, and we're doing, we believe that you should do good before you do well. And it's been really paying off for our, many users, for our employees. It's been exciting. We work 7 days a week, which is insane, but I come back home every day and every night very late, because I work from Tel Aviv with our team in the US. And what makes this, effort and the price we all pay in building these organizations better or worthwhile is that we know that we made a difference in another customer's life by giving them something that banks are not giving them. When you compare what we pay versus the typical bank, as more and more people realize that we are able to pull in more and more people into crypto, which is something that will benefit all of us, all our projects together. So that's that pretty much.
I love it. Well, everyone's charged up. Get excited, guys. We got a fun episode.
Let's go.
This is there we go. All right, Alpish, welcome back to the show. I know you're fired up on this Friday episode of VCTV as well. Kick us off.
Hi, everybody. I'm Alpish Doshi. I work for a company called Fintricity. I've been in fintech for 20 years, working in blockchain for 6. We have a venture studio and consulting firm, and like to build emerging tech businesses and help companies transform. And yeah, that's it. That's it for me.
Rock and roll. Anuj.
Right, good to be back. So I'm Anuj Chauhan, serial entrepreneur, started 3 startups in the past, presently working as the founder of Yellow Sapphire Technologies and Atutum. Along with it, I work with iAngels for investing in Israel and with a family fund based out of Buffalo, New York. I'm also an international partner at World Business Angel Forum, where we are working towards their commitment towards global financial inclusivity. So helping promote banking services and entrepreneurship across the world.
All right, Mr. Gary Fowler, Grandmaster of AI. Little intro for everybody.
Yes, the force is with you. Yeah, thank you. It's good to be here. Good to see all my friends here, Irina, Anuj, Alpesh. I just like a family experience. Daniel, welcome. Anyhow, my name is Gary Fowler. I'm a serial entrepreneur, and I've done 16 companies, 2 unicorns. I was on the original management team at Click Software from Haifa that was brought to the U.S. And was only person that was not from Israel at the time on the U.S. team. We did an IPO on NASDAQ. Company was sold to Salesforce. That's 16 months ago for $1.35 billion. I ran marketing, business development, and anyhow, as a senior vice president. So I'm into AI. I love artificial intelligence. I've got a venture studio, GSD. We've got 17 portfolio companies today. In fact, I may have to jump off this call because I actually have a $15 million raise and I'm the CEO of that company. So I have to jump off a little bit early, like 15 minutes, because I want to just get my mind straight. But what we do is we take companies from all over the world, use Silicon Valley as a port to the rest of the world. I spent about 14 years in Russia, so have a lot of experience in that region, that entire region, Belarus, Ukraine, Central Asia. So we're looking for cool technologies that want to go global and to create a unicorn. And it's good to be here with my friends, to see everybody today.
I love it. Last but not least, Noble, welcome back.
Happy to be here, Daniel. I'm a Celsius user. Love it. Great. Love the interest. We're playing around and doing some of our own DeFi projects because of Celsius. And so a big believer in the new wave. My name's Noble Dracone. I've been in the investment industry for 20 years. I started off in the 90s doing Forex and futures trading. I've written 7 books on trading. And so I've been a big believer in being able to scalp for a long time. Right now, I'm the advisor of M Accelerator. We have a $15 million venture fund, in which we're focusing on those people who are in our incubator accelerator to help them just grow and expand. You know, we have a very aggressive mandate for diversity among all spectrums, and we're really pushing that forward. I'm also the CEO of Where Play Games, which is an AR/VR interactive gaming mobile gaming company, and we hold patents in AR and interactive clothing and the like. So we're very excited to be here as always, and happy to see Irina and Gary and everybody. And Nuj.
Wonderful. Wonderful. Happy to have all of you here today. And let's jump right in, as I know we've got tight timelines today with everybody, but a lot to talk about. This industry changes on the millisecond versus the day or the week. We've talked a little bit in the pre-show about NFTs being everything and the new DeFi all of a sudden. And speaking of decentralized finance, you know, May 28th, we hit about $1 billion, 1 billion USD in TLV, total lock value. And here we are less than 6 months, and we're almost on our way to $14 billion locked away in that same DeFi world. Just showing this continual growth pattern. We also have new protocols, new picks and shovels, new areas launching at a regular and also improving, which is the key word. We don't just see new projects come and die. We also are seeing improvements as well. And hopefully we'll see Ethereum 2.0 really get taking off here in the next few months as well. But want to hear from each of you what you're seeing as the current state. What's getting you excited about these two industries? Again, fintech and blockchain, as each of you focus in different areas, and would love to hear your views of where things are currently. Irina, we'll kick it off with you.
Thank you. I really appreciate that question. To me, it's the final emergence of traditional finance and blockchain technology. So it's not just finally, to me, what I'm seeing and what is, I believe, changing the world and will play a huge impact on global scale is that we finally can take a blockchain and we can inject it and introduce it into the traditional finance. So globalization of capital markets is finally going to happen, and I think it will make huge impact on everybody.
It's a great point. We're starting to see a little bit of that in actual deployments as well, which is fascinating because we've been talking about it for so long. It's finally here, and this has been a big year for that. No longer talking about it, no longer talking about it in the boardrooms, no longer just doing pilots, but actually doing real life deployments, which is exciting. So thank you, Irina. Daniel, to you, current state, what are you seeing from your side of the world?
Look, I don't know where you start with. You know, this is a loaded question because the world has changed since, I don't know, November of last year. And I think, you know, I don't remember who was Novogratz, I think on CNBC said that this industry, blockchain, crypto, two very different industry related but different, will have Corona to thank for what's happening out there. You know, from this trillions of dollars that money is printed, that is pushing more and more people into looking at Bitcoin and these various cryptocurrencies as a better store of value. And we're seeing what's going on out there. Is that sustainable? No one knows. But there's certainly what we have seen that started as a health crisis and turned into an economic crisis, those two crises have brought a tremendous opportunity for us as an industry, to take decentralization and say, you know what, it's not only the store value, but it's also the ability to really disrupt these industries that have taken advantage of billions of people that are now turning their attention into the digitization, I cannot pronounce that word, of banking and payment. And suddenly you have people like my parents who we don't like this stuff, saying, you know what, we're going to give digital neobanks a chance. We're going to give cryptocurrency lending platform a chance. And that's what's driving it. What gets me excited is to see PayPal coming in and making this whole industry accessible to tens of millions of people, tens of millions of small businesses. It's suddenly getting this renewed faith from various institutional clients. You know, you look at the graph of institutional clients signing up to transact with us, right? It's grown in, 1,000, 2,000% just the last 8 months. So this is that renewed interest that I believe is real this time. I think that train has left the station. I think that these structural changes that are affecting everything, from the way we work, to the way we interact, to the way we conduct business and commerce and transaction, are here to stay and give this industry an opportunity which it's never had before. And that's the exciting part.
Agreed. It would be an absolute shame if we went back. An absolute shame. I mean, it would take us back. We've been accelerated. I think the McKinsey quote is what, 5 to 7 years and 6 to 8 months we've been accelerated in terms of technology and innovation. It would be a darn shame if we decided to revert anything of that back. To Daniel's point. So thank you, Daniel. Alpesh, to you, current state, what are you seeing?
Yeah, I think it's quite interesting because I just got involved with another fintech that does payments and lending. Yeah, and this is in the traditional world, not in the DeFi world. And if you think about, everybody knows these stats, right? SMB lending, there's a shortage of trillions of dollars for SMB lending, right? At the moment, it's done in the traditional way. We've seen in the UK companies like Oak North, and I don't know whether some of these people, some of you will know Oak North or Funding Circle in the UK. Some of them have global brands. But, we've seen these alternative SMB lenders come in. Now, if you then take that traditional model of fintech that's emerged and match that with DeFi, so if you could, for example, DeFi, the lending, that and the borrowing, that would be a phenomenal. So, and you combine that with payments. So obviously PayPal has started to accept payments and added in Bitcoin, but you could obviously, the assumption is they'll do other tokens as it moves forward. So that would be very interesting. So I think, what I've been talked about before, DeFi things in a bubble. And as that bubble starts, you poke holes in that bubble and it starts going into the real world, we'll see an explosion of growth of overlapping. And let's be honest, companies like SMBs for fintech don't really care where the money comes from if they want to borrow it. They just care that they can access it and they can get reasonable interest rates, and it's done digitally end to end. So that, I think we'll see some pokes in that bubble next year. And that's exciting, right? I mean, I'm in fintech. I can see that could happen now. So, yeah, it's that convergence. I'm waiting for that, out of the bubble into the real world, and we can see the elements of that starting to happen.
Well, and that it's easy as well, right? Daniel brought up PayPal. Yeah. I mean, PayPal was incredibly late to the game, but whatever, they're here. And what they did is brought that opportunity to the masses in a very easy way. Where most people don't have to be concerned. They don't have to question a lot of things because it's a very simple, easy, and in some cases, a trusted process they know very well or are familiar with is probably the better term. And so, Alpesh, I agree with you. I think we're almost there. That bubble's about to boop and open up the world that you're so excited about as well. And Anuj, to you, current state, what are you seeing? I mean, you're all over the world from your couch, nonetheless, but you're all over the world in this industry. Working with so many different groups. What are you currently seeing right now happening?
So, one thing which I love about this industry and which I love about these sessions as well is it keeps me up to date on new technologies, and it makes me think about new technology, what the future could be. I have talked a lot about fintech companies in Southeast Asia. I've talked a lot about blockchain coming up in gaming, but there's always that new thing which you've probably not seen before that comes into you in a eureka moment, and that that that's something that happens often in this industry. Every now and then things change so fast that you see something and you think, wow, this is something that technology will probably change. And one of the key areas that I'm seeing that now over the last 1 or 2 weeks is in lending sector. There's this recent email that I received which mentioned lending as a service, and I went, okay, um, I'll take that. But that really got me thinking a week or so later, because like Alpesh said, there's always been that shortage of funding, be it in Southeast Asia, be it in Africa, be it in the United States as well. So there's always that funding shortage for small and medium enterprise, and they always have to go to some non-banking financial solution. There's always a chance to raise money from your network circle. There's always some non-banking financial institution that's willing to lend you out. And let's not forget, there's some cultural institution that comes in handy, especially in Southeast Asia, where, talking about India, chit funds, even though they are illegal since they are not regularized, they primarily exist. And there's always that community of 30 or 40 odd people who come in to develop as a fund that they use over the next 3 or 4 years, which is helping out everyone. I mean, sure, it's not regularized by the government institution because they understand there's always that risk involved. If just one person in that fund goes bankrupt or goes through a financial emergency, there's a chance that everyone's going to lose their money. But that's where you see that, all right, see, this is where you can use blockchain. This is where you can develop a system where you can now, in a post-COVID world, make sure that they don't have to meet on a monthly basis to have that kind of interaction with their funds, where they can do things digitally now. And while all these primarily operated by very senior members of the society, people who are well above the age of 50, 60, the youngest you'll find is someone who's in their 40s. So for them, making that transition from something non-tech to tech is always difficult, but now that becomes the need of the hour. So service, like I mentioned, not something which I thought I would see as a phrase or as a service coming up, but yeah, I'll take it. There's that shortage of funding. Let that money flow.
Mm-hmm. Agreed. And Noble, to you, same question. Continuing on Anuj's point. Thank you, Anuj.
Yeah, no, I mean, it's insane. You know, our gaming company just released our first digital NFTs in the same vein as, Garbage Pail Kids, which has a huge NFT following on Wax. And so we just have a relationship now with Wax.io, and we're on the EOS network where we're releasing them. And we were so surprised that after we did our first test releases, within seconds, people were buying the NFTs for a game that still is not going to be out until the spring of next year that we're about to release. And it just opened our eyes. We knew that there was an appetite, and that the whole idea of the non-fungible tokens is here to stay as a store of value. But we also realized that this is part of that overall ecosystem. You know, you can do things such as staking your NFTs to mine additional coins. There's all these very unique things going on in this space. And so, a big aggressive thrust, and we talked about this before, it's interesting how individual companies are really becoming their own currencies by default and creating their own life. And so when we start out, we're saying, okay, we're a mobile AR, VR gaming company, to now we're looking at developing other DeFi products around the NFTs that we're about to release. And now we're in the banking by default because we're creating these projects. They have a store of value. They have their own rarity. And so that whole entire side of the business is not something we would have thought of pre-COVID. It was not even on our radar. Our whole focus was to make essentially a Pokemon Go clone in the beginning with some, distinct components that we had already brought to the table. And now we are by default now becoming a DeFi company because we're taking assets from our game and giving people ownership. And that's really the next phase. You know, I've talked the last week, Kyle, about how, you know, there's people are going to be playing games, and for the first time ever, they're going to be finding themselves making money from the game. The hours spent, the time spent, the items accumulated, the things acquired are now going to have, they're going to have ownership. And that's a big thing that has been kind of taken away from people. Before, we'd go out and buy CDs and we'd own the music. And there was a big fight, whether do you own the music or you own just that one? Can you put it on the net? And that's what Napster got in trouble for, right? And then we all of a sudden said, okay, let's rent everything. So everything is as a service. Nobody owns DVDs anymore. We go on and we stream everything. And now we're getting back into ownership, in which the digital assets that we've been renting, we should own. So people are figuring out ways to monetize it, compress it. Yeah, you know, we do consulting work with at our gaming company, and we do video games, and people hire us all the time to make stuff outside. We have musicians and artists coming to us now that we're in the NFT space saying, how do we take our physical, you know, artwork, put it on the blockchain and monetize NFTs? We have a musician who's world popular, very popular, we're having a meeting first thing next week with them, talking about how to release a limited edition album just as an NFT to his fans and maybe others, and turn that into a blockchain asset that goes beyond. So there's this whole thing in which creatives are starting to understand that unless they participate in the blockchain component, they're not going to add value and store value. I've been an investor in music for 26 years. I buy copyright, I buy publishing rights, I buy artist rights, the like. And even in that, there's a transition where all these artists are starting to understand that this quarterly payments that you used to get from, or biannual payments from ASCAP and BMI, are not, is not enough. You should be able to get monthly payments because they're playing your music monthly, and the system itself is broken. And so we're even looking at creating a DeFi project around that. So there's things that, you know, you just didn't really expect. And I believe that the creative space especially is starting to realize that this is a way to unlock money and not and eliminate the lack of transparency. So the banking issue is not just the average person going to the bank. The banking issue is broad, in which people just are not getting access to their money, and especially people who receive royalties. So I see a big shift in transition in that space.
And thank you, Noble. Gary, last but not least, current state, what are you seeing?
Yes, thanks, Kyle. So, I mean, the things that are really interesting for me, you know, we talk about hyper personalization, you know, simple things like why don't we have more conversational AI throughout the experience for loans, for online banking, and of course, because of the pandemic and now the uptick, although we talk about it being behind us, it's actually probably ahead of us. So we talk about, you know, digital banking. I mean, you can't go in a bank. It's very difficult to go in any bank today. And so we've been forced to really do things a lot differently. It used to be you go in, you want to get a loan, you shake hands with the loan officers, they sit down and talk to you, they walk you through the process. But that's no longer really the way to do it today because of the pandemic, et cetera. It's limited, yes. So, and using technologies like InvestNet and Yodlee to really enrich that personal experience, to be able to have a truly enriched hyper-personal experience. But all this comes at a cost, Kyle, because what we have really across the board today is the issue with security, right? How are we going to protect? We talk about all these transactions we want to do, all these bank accounts. We all want to be online, but you know, the hackers are still out there trying to figure out how they can poach the money. Then you know, quantum computers start to come into play. And are we going to be able to do anything? Or I think you said it actually, is it going to be a non-cybersecurity world where, you know, it is what it is, and quantum computers versus quantum computers. So we're in a totally different environment with that. Won't happen tomorrow. The other thing in the bank is a remote process automation. And how do we take some of those mundane tasks, like when you're initially filing for a loan, right? And to make it enriched, you don't really need to have somebody there to do it, at least for the beginning stages, unless it's a really large home loan. And even then, I'm not sure. The data's out there, right? I'm not sure why you even need a loan officer, because all you should be is input your data. They pull the credit reports, look at what your history in terms of how much money you make, your last 2 years income taxes, and make a decision. It shouldn't be that, it's not that hard, right? It's just a simple transaction. And quite frankly, that's how they do it. So I'm looking at all those areas as opportunities, and I've talked to you about this before, but I'm really the paycheck distribution being done on it should be, if I earn the money, I get it. It shouldn't be I have to wait 2 weeks or a month to get a paycheck. So why can't that be done a little bit differently? And so those are the kind of things that I see. It's, what's happening, our lives are turning into a real-time world. It's not like this batch world we used to know in the past. It's really real time. And how do we get that information and use it right away to make decisions? So as soon as I get my paycheck, I wouldn't be surprised in the next couple of years if I start getting offers to buy things that I like, right? As soon as it hits a bank, oh, buy it now and you can save money. You got a limited time offer, 24 hours, and you're going to get a 10% discount, right?
Yeah. Daniel, I feel like you're holding yourself back from this. Anything to add on to that piece?
No, I think it's going there. I don't know if it's going to happen next year or 2 years or 5 years. No one here has a crystal ball, but it's going there. I think there is a very significant structural shift that's happening that cannot no longer stop the innovation. When we started this thing, we really believed that governments are going to come and try to stop us and come up with all these regulation. It's not there, right? As long as you do this by the rules. We're seeing government becoming. We're seeing what the U.S. has done with allowing banks to hold crypto. That's a huge thing. We're seeing Kraken getting a banking license. Big things are happening, and I think that look, I've never been more excited being part of the teams, the companies that are building the future.
Couldn't agree more. There hasn't been a more exciting, I think, industry or time in the past few decades than right now. And going back to the early days of the internet.
I do want to add one thing, and I think you touched on this with PayPal, right? For us to get the next 100 million, 2 billion people, we will have to think UI UX first. It's hard. It's really hard for people in 40, 50, 60. It's hard for people to relate. It's hard to open an account. It's hard to transact. And I think PayPal has started that movement. We're investing significant capital in making our platform super easy and super beautiful, with the hope that will get the next wave of adoption out there.
Well, and it's usability and also familiarity, right?
Absolutely.
PayPal is a company that's been around for some time.
That's
People
the trust
understand
part.
it.
Yes.
There's the trust factor. There's also the simplicity of, oh, this is a PayPal account. Okay, here's money. I can get money in. I can get money out. Right? And bring Venmo into that, and Venmo being their digital P2P or peer-to-peer transaction, but also a digital wallet, right? This is what's funny is when we look at this, right, as being innovators and investors and having seen this industry flourish, is we can see how some of these building blocks all play on each other, right? Venmo is essentially a digital wallet, the way we look at digital wallets on the cryptocurrency or digital currency side, but for everyone else, that is a digital wallet. It's just the very early days of one, and helping to educate those in here, which is exciting. And I'll throw this out there and open the floor, as Alpesh teased me I don't do very often, so I'll open it. What is the next opportunity? Where do we go from here? Is it picks and shovels? Is it UX UI? Is it decentralized finance? Is it NFTs? What is the next step? Where do we go from here? And Alpesh, you can kick us off, and the floor is open. I'll just guide you.
Well, I think, unfortunately, okay, look, on one side, DeFi has done great this year. On the other side, digitization, digital transformation has accelerated in fintech and financial services, and also there's a bit of sanity coming into the market, which is great. Sanity around the application of blockchain, sanity around fintech. We're seeing it. We're seeing the sanity come to the market. So from my perspective, PayPal is a great indication of the mainstream usage of blockchain and Bitcoin and other currencies. But I think we're still in its infancy in terms of actually people understanding it. So a lot more education has to happen, a lot more awareness. There's still skepticism around scamming on crypto. Unfortunately, so much, just because of the bad press in 2017, that hang up is still there 3 years later, So my view is that it's great to see people like PayPal legitimizing it, people like Fidelity, obviously, as well, doing stuff. So those kind of things help to legitimize that. And next year, I think we'll see a lot more people, the more sophisticated, so let's say you've got us in the crypto world, or blockchain world, have been in it for a long time. Then you've got the sophisticated investors who have already come in. And obviously some have shed loads of money, some have lost loads of money, right? Now is that next to sophisticated investors, the sort of high net worths, family offices, looking for alternative ways to make returns on their money. I think we'll see those guys come in. Obviously, we still got the young, the millennials having wallets. They may have a lot of money, but they're very open to using this stuff. They're all digitally native. They use apps and they're just used to it. So I think that middle bit is not there yet. I reckon it'll be another year, a couple of years before that happens. But we're seeing the most sophisticated guys come in where the money is. There's large amounts of capital there. Mm-hmm. So, but also in DeFi, the challenges of, let's say, problems, fraud and everything else, that's still not fixed. So the wariness around people around what happens, there's already been too much press about things going wrong, in quotes. So I think that has to be fixed again. We don't want what happened in 2017 to go into DeFi and that lose reputation. So I think these are the kind of dynamics that I think we'll see next year.
Yeah, I'll chime in just because I have to leave soon. I think that you touched on a very good point. I think that the trust and credibility of the industry, and yes, PayPal helps, and Fidelity, and JP is doing some interesting things, and Cash App and Jack Dorsey, it's all nice, but still, as a result of 2017, we just had this really nice article in the Israeli Wall Street Journal. Cover page was really, really nice. And I thought, wow, great. But when you look at the comments to that article, fraud, scam, don't give him your money. It's impossible that he's paying all these interests because my bank for the last 50 years hasn't, so it cannot be real. Ponzi scheme. I read this, I've got goosebumps right now. And I'm like, wait a second, this was supposed to be a good thing. And I've got people from Facebook, friends of mine, saying, why are you doing this scam situation? And I'm like, what is happening here? This cannot happen. What happened in 2017 hurt credibility. So if we want to make sure that this doesn't happen again, investors need to do their due diligence and invest in real projects. Real projects needs to stay true to the commitment that they are giving users and their investors. Yeah. Right? We need to work hard. There are some bunch of bad people who would like to ruin their reputation. If there's hacking, if there's security and all this other stuff, there's so much work for us on the education front to show we are not the problem. It's what you've been doing with your banks the last 50 years. That's their problem. That's the scam. You just are not used to anything else, right? And I think that's the opportunity. And it's almost like the foundation that we have to create in order to realize the opportunity that we're here to discuss.
I would like to add something to that. I think that the thing about it is that we kind of think that it's that industry associated with scam, and then there's the bottom line is scammers are everywhere, and they've been everywhere always. It's not the banking system. It's not. They're just there, and we are susceptible to it, and we keep building better systems. The bottom line to me is that with building proper governance, right, and truly applying technology within regulated markets, we can make sure that the scams are minimized. Now, remember, we'll have quantum computing coming in. It's going to come and wreck our finance industry because it's going to break things in a way that we cannot even predict. And it can happen like next summer, right? So the reality of things is that everything is moving forward. And the technology that we have, the single source of truth and ability for you to keep the records, right? It's just a great record system it allows us to eliminate a lot of the schemes. One of the biggest Ponzi schemes, have been through SEC approved companies and all of it. It's just some people are evil that way, or maybe they're broken or whatever, and there will always be scammers. So, and I would like to add to you, Daniel, that I really appreciate that you guys came in 2018, because you came post the rush of people that only cared about money and did not care to really understand what it is like to hold crypto, to manage crypto, to have to have just that management, right? As well as banking issues and other issues that are associated with that. Because you came in later, you already could see that a wrong decision can completely wipe you out. So a lot of learning and realization for industry came through that. The problem before is that small amount of people understood before 2017 really how infrastructure works, right? A lot of people were holding crypto, but not really understand how do the banking systems work. What do you need to do? How much are the fees? How long is your account frozen for? What is your treasury management looks like?
Right.
And how do you integrate it into traditional paying people salary and stabilize, right? Because as your company, you have budgets. We have that now. And finally we can do it. And I think, and look, guys, it's about to go like it's never before. Every single time post halving, we have a bull run, okay? And within this bull run, we always anticipated, we hope that the things that we are hoping for will come true. And every time it comes up and we don't know what hit us, because it just goes in all of the verticals. I think everything that you described today is going to happen parallel and within the pressure that is unbelievable. Such as beautiful design of Satoshi Nakamoto. It's a beautiful, perfect design. I love it. So that's my 5 cents. I'll bow out.
Yeah, I mean, the only thing I'd like to add to that is that the biggest Ponzi scheme is the Social Security system. My degree's in finance, and I've been involved in investments day in and day out for almost, like I said, 28 years. And so, when people lack an understanding of finance in any sense, stretch of the word, they miss the boat on what's happening in general. And it's not that any of this is a scam or, let's be honest, Wall Street started as a scam. The reason why Wall Street exists is because people were hawking stock on a street called Wall Street. And because the Brooklyn Bridge was sold over 100 times doesn't mean people stopped buying stock. I think the idea that you want to kind of throw the baby out with the bathwater is ridiculous in the sense that all of us can't be held accountable for something that we were not involved in. And so, you hit the nail on the head. It's the finance industry in general is going to have unscrupulous dealers and bad actors. And sometimes those bad actors are literally sanctioned. We had our fund, we had our hedge fund operating at MF Global, and Corzine, who was a former Goldman Sachs guy, took all the clients' funds and bet on Greek bonds, and impacted us and everybody else. And they were audited, they were sanctioned, everything. And then him and everybody went in front of the Senate committee on television and said, we don't know what happened with over $380 million. So, and they were complicit with JP Morgan in that scenario. So the reality is the paradigm shift. People are always going to say this is a scam, but anybody who's seen The Wolf of Wall Street understands that stocks are not immune, that bonds are not immune. We look at Michael Milken. None of that stuff stopped the industries from evolving. And so I think that we're in a phase now that people are sophisticated enough to understand that progress moves forward regardless of the bad actors. And I think that our job is just to continue to innovate and build.
So I'll add some final notes to that. And I'm going to be a bit controversial here. Pardon me, guys. So during the 2017 run, when everyone was talking about crypto, talking about India, Reserve Bank decided we are not going to identify them as currency. So they, instead of calling them cryptocurrencies, they call them crypto assets, which was a smart move on their part. Of course, that was the year, like Irina said, no one knew what it was, but people were still holding it because they realized, oh my God, it's growing overnight. And while in doing that, their next step was banning trade. So no one could use an Indian bank account to buy cryptocurrency. No one could use it to sell and get its remittance into their account. In a way, they stopped a lot of innovation. They stopped people from mining it. They stopped people from entering into that market. Now, of course, while that saved in a country with 1.3 billion people, it saved a lot of people from investing and losing money. It also stopped a lot of people from making money. And that's the balance. Now, Alpesh and Daniel talk about regulation, that how regulators were probably going to stall the innovation. I'm going to take a different stance here. Regulators did their part. They stopped it in India, but it kept exploding everywhere. There's one more hurdle that's stopping the innovation, and that's not from regulators. That's from the big tech itself. While we are working in the tech industry, let's not forget that the big tech, the top guys are still not willing to accept cryptocurrency and blockchain as a viable option. If you develop an app that's working in blockchain, that's working towards blockchain trading or cryptocurrency trading, Google will not allow that on Play Store. Same goes for Apple. And that's a very, very important thing, because having said this before n number of times, for a new fintech company to change the system, they have to make it easy. That's it. That has to be the primary rule, because anyone who's not in the banking system right now has that complication that when I jump in, when I'm making a transfer, if I have to jump through multiple authentication system, it's going to make it too complicated. People are going to give up. They're rather just going to work with cash, because let's be honest, all you have to do with it is just count.
I don't understand the argument. So what are you saying that's controversial? It's not regulation, it's tech.
Exactly. While regulation is one part of it, let's not forget that in many countries, cryptocurrency is still not banned. It's tech, that tech adoption, that market adoption is still not there. Market adoption will come in when bigger companies, when people who are already in everyone's house are going to accept it, are going to use it properly.
Yeah.
Adoption comes when we have regulatory infrastructure. Okay, so regulatory infrastructure passed, and then technology builds underneath that infrastructure. That takes time. So now we're there. Once we have that, we integrate technology, which is what we're experiencing right now. And then that's how people actually become crypto users. They're not going to know that they're using blockchain. I mean, we all know that. And it is, guys, happening now. That's the important part, right? It's not Bitcoin, it's not cryptocurrencies. It is a technology infrastructure that are now understood by regulators, and they're implementing it. There's a rush all over the world to see how they can take the power of and be new global capital markets of the world, right? A global hub. And it is happening right now. So what I think what you're saying is already happening, right? That adoption is there. So what we need to do now is we need to make sure that we build two things. One is permissioned, very well understood, very well designed, regulated blockchain, so enterprises and closed networks can use it. And then really concentrate on building truly decentralized networks, because anything that's centralized is not a single source of truth. So anchoring into it kind of makes sense, but it's not that single source of truth. We must work on two polar opposites. And of course, everything else is, everything else falls from under there. Your fungible, non-fungible, all your tokens, all your cryptocurrencies. It's an additional thing. It's not something that's going to be adopted by people. It's very techie things, and techie people love techie things. And as soon as this becomes unsexy, we're all moving on to the next thing, because we're about to implement it. It's going to be awesome. And there's going to be something else, and it's going to be awesome, right? So I think that we are there.
So I'm going to jump in here real quick as we're coming close to the top of the hour. So we'll make sure everyone gets in their closing thoughts, and of course, where everyone can be found online, as we do have a hard stop with everyone's wild and exciting days. To Arena's point, is we are heads down, building, making this usable for many people around the world. So as we come to close here, thank you all so much for sharing your thoughts and insights. Daniel, let's start with you. Closing thoughts, anything else to add? And then of course, where can everyone find you and the company Celsius online to continue the conversation or get started?
Crypto will be 2021 will be a great year for cryptocurrencies. Tokenized gold, things such as that are going to really accelerate adoption. Very exciting time to be in the space. Check us out at celsius.network, and thanks for having me.
Wonderful. Thank you as well. Arena, to you. Quick closing thoughts. Where can everyone find you?
Such a pleasure to be here. I'm excited to go back and organize the stage, the sound installation, all that is happening. Alex is, by the way, is going to be one of our hybrid speakers. So I'm excited to have a fireside chat with him. It will be awesome. Twitter, I think, is a good way, and also LinkedIn. Find me anywhere. I'm on all platforms.
Wonderful. Thank you. Anuj.
Find me on LinkedIn. You have my name right here. So drop me a text, email me, anuj@yellowsapphiretech.com. Adding in some final thoughts, like Irina said, things are changing in 2021. You mentioned PayPal finally adopting crypto, and that's the first step that I've been mentioning, that big tech not adopting it is finally giving in. They are going for it. One thing which I have been saying, that you have to make sure that you're not competing against an already established industry and trend, to make sure that you are adding on to it. So rather than saying, hey, crypto is going to replace bank, we don't need Swift anymore, let's stop that competition. You build something that improves that Swift technology and makes it better, rather than saying we're going to replace it. That's not how things work. The moment we get that mentality, like you said, we are nerds. Nerds love to nerd out. I'm sure the nerds out there, they are going to work on this. They are going to build something, and can't wait to see what they come up with.
Agreed. Thank you, Anuj. Noble, quick closing thoughts. Where can everyone find you?
Yeah, I mean, my biggest thought is that I don't think everybody has to be in crypto. I know there's this magnanimous thought that it needs to be for everybody, but I've been a big believer in the riches or in the niches, right? So I think that we're in a nice niche, and I think that we have an opportunity to cater to people who want to be catered in this space. Easy to find me, Noble Dracone on LinkedIn, as well as reach out to me on Twitter @Dracone. And you can find me Noble at Whereplay Games. If you want to email me directly, noble@whereplaygames.com.
Wonderful. Alpesh, close us out. Last closing thoughts. Where can everyone find you?
Yeah, I mean, I think the overall trend you always see is that sophisticated investors adopt first. That's why Fidelity, that's why Goldman, that's why, JP Morgan, all these guys provide products and services to the high net worth, the family offices, the sophisticated investors. Now, it always starts there. As that gets more and more adopted, it will go down the channel, it goes down to everybody else, right? So that trend is starting. You can see it. So it's exciting. 2021 is going to be pretty good. It's been a pretty bad year, 2020. I don't think we're out of the woods in terms of COVID, but look, hey, it's exciting in terms of the digital transformation of the world is starting to accelerate, which is great. You can find me on LinkedIn. My name is there. You can find me and connect to me. Let me know where you heard me. That'd be really cool. And on Twitter, it's @Alpostoshi. And yeah, thanks, Carl.
Wonderful. And thank you all again so much for your time, insights, and everything today. Really appreciate it. Also, again, to our audience, as Alpesh mentioned, please do reach out to all of our investors. If and when you do, make sure you add context as to where you heard, where you met them, and where also you would like to continue that conversation as well. With that being said, a big thank you to our audience for tuning in. If you like what you heard, click subscribe, give us a thumbs up. Do reach out if you'd like to be on a show, whether as an investor to share your thoughts and insights of technologies, industries, or regions around the world, or as an entrepreneur to join our virtual stage and pitch us your company, product, or service to build foundational relationships with us, get real-time feedback and exposure to our live audience. with that, a big thank you as well to the LA Token team and Maria for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott. You can find me everywhere online at Kyle Ellicott, along with all of our guests. Everyone have a great weekend. We'll be back here with more VCTV next